Let's talk about how to pay yourself in a single member LLC. So here's an overview I want you to pay attention to if you are trying to pay yourself in a single member LLC. The thing is, a lot of folks believe that when we talk about an LLC, you have to be a multi-member LLC, but no, you can be a one person, you can be a one person business and still be classified as an LLC. The thing is, when we talk about, first of all, can a single member LLC pay themselves? Yes, you can pay yourself from a single member LLC in multiple ways, but there is a required method for each situation. So you have a series of situations and you have to make sure that you comply with the law when it comes to the specific situation you go with. Everything primarily depends on how you elect to treat your small business for tax purposes. So you have three options. The default. So if you file no additional paperwork with the IRS, your single member LLC is taxable as a sole proprietorship. That means what? It means you must pay yourself exclusively through the owner's draws. You can also elect to be taxed as an S corporation. So if you file Form 2553 with the IRS, they will treat your LLC as an S corporation for tax purposes. You must pay yourself a reasonable salary, but you can also take any remaining profits as distributions. That's option number 2. Option number 3, C corporation. So you can classify your single member LLC as a C corporation. So if you file Form 8832 with the IRS, they will treat your LLC as a C corporation for tax purposes. You must pay yourself a salary that equals reasonable compensation if you are involved in the day-to-day operations. However, you can also pay yourself whatever business profits is left over by actually issuing dividends. So you have the three options here. So whichever taxation method you choose, you will always be able to pay yourself from your single member LLC. However, and this is a big however, the methods you use to transfer the funds differ, as will their tax consequences at the personal and business levels. So this is really important to have a clear idea. So remember that. So as you go in this video, I want you to remember those three options: the default, the S corporation, and the C corporation. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's quickly go through the steps that you need to really follow if you want to pay yourself in a single member LLC. So how do you pay yourself from your LLC? So assuming your single member LLC receives the default tax treatment from the IRS, you will need to pay yourself from the owner's draws, right? That sounds normal, but there is no additional way to do this. It just means what? It means that you are taking money out of your business to pay yourself. In practice, as a business owner, you can complete an owner's draw in any of the following ways. You can write yourself a check from your business account. So let's say you have a business bank account at Chase or Wells Fargo for your single member LLC. So you're going to have to write yourself a check. So you are the drawer, you are the issuer and the recipients of the check. So that's option number 1. Option number 2, you can withdraw the funds in cash from your business bank account. So if we go with the hypothetical Chase or Wells Fargo LLC business bank account, you take your ATM card, you go to an ATM machine, and you just get the cash out of your account. That's option number 3. Option number 2. Option number 3, you can electronically transfer funds from your business to your personal account. So let's say you have a Chase business account and you have a Bank of America personal checking account. So you will transfer you transfer funds from one account to another. So those are the 3 ways that you have to pay yourself from your single member LLC. Now, if we're talking about an owner's draw, one thing I need to say here is that everything obviously has to deal with the profitability of the business, right? So because the last thing you want is to actually have a business where you withdraw more funds from than are coming. So if you have cash inflows that are lower than cash outflows, at some point you are going to have no funds left. So it's important. This is why the IRS talks about reasonable compensation, because see, the thing is that it has to be reasonable. Not only if you were to compare this to what similar professions are paying themselves in the industry, but also in terms of being a reasonable business manager. So you have to always look at the liquidity inflows in order to set the amount of salary you have to pay yourself. Very important. thing I want to say here is that when we talk about paying yourself via personal check, via personal draw, or via other means, it's a matter of convenience. The tax consequences are identical, and these transactions show up in your accounting records the same way too. Okay. In other words, you will see debit cash, and you will see credit an equity account. Okay. Now, to document an owner's draw, you will need to decrease your business's cash balance and retain earnings accounts by crediting the former and debiting the latter. In other words, this is simply more like simply accounting. So basically, you are going to debit the retained earnings account, which is retained earning is an equity account, and you're gonna have to credit the cash account. The cash is an asset. So the bottom line here is what? If you are trying to really if you have no idea what I'm talking about, maybe it's just time for you to have an accountant. Okay. Even if you have a single member LLC, you might need an accountant, or you can just go with like a basic accounting software tool such as QuickBooks Online or Wave or Xero or whatever. So this is kind of cool. And this is actually important anyway, because if you have to, let's say, God forbid, you were audited by the IRS, at least you have some paperwork. You have some paper trail to actually justify all the transactions you have in your company. Okay. So unlike a salary though, owner's draws don't have to follow a schedule or stick to a fixed amount unless you actually set them up as a guaranteed payment in your operating agreements. So as a result, you can adjust those owner's draws to match your business's cash flow throughout the year. That's what I said earlier, that as a responsible business manager, if you have to pay yourself in a single member LLC, you have to actually make sure that whatever comes in is actually always way larger than whatever's going out. In other words, your cash inflows must be significantly larger than your cash outflows. Otherwise, at some point you will have no money left to be able to operate. So this just makes common sense, and this goes back to the theory of reasonable compensation that the IRS is actually pushing forward here. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay yourself in a single member LLC. Let's quickly talk about how the owner's draws are taxed. Okay. Taking an owner's draw from an LLC is generally a non-taxable event. Because what? Because this is actually an accounting transaction that doesn't generate any type of revenue at the business level. However, that doesn't mean that you don't pay taxes on the amount, because to you it's income. For the business, it's not income because it was already recorded as an income before. Okay. So the thing here is that instead, you have to pay taxes on the amount because you incur your tax liability on those funds prior to the owner's draw. So the transfer is mostly irrelevant. Single member LLCs, taxable as sole proprietorships, are pass-through entities in the eyes of the IRS. That's the IRS call them disregarded entity. That means what? It means that the IRS disregards them for tax purposes, and you will not pay any corporate tax for the company. As a result, your business income is taxable at the personal level, whether or not you withdraw it. And what happens here is that the tax liability for whatever money you generate automatically flows through to your personal tax return. So what will happen here is that you'll have to pay taxes at the personal level on your Schedule C. So because you're not taking a salary, you can't pay your taxes through withholding from your payroll. Instead, you will need to make estimated tax payments each quarter throughout the year. So this is kind of important. Now, let me give you an example here to demonstrate how the whole thing will work. Say you are the sole LLC member of an LLC taxable as a sole proprietorship. So in 2023, you earn $100,000 in net income through your business. At this point, you already know you have generated $100,000 in taxable earnings and would owe income tax and self-employment tax on the entire amount. You then decide to take, say, $75,000 in owner's draws and leave $25,000 in the business bank account to cover upcoming company expenses. Now, however, that doesn't impact your tax liability for the year. You'll still pay taxes on the $100,000 on earnings anyway. So this is important to remember that. Now, if we have to talk about reviewing everything, here is a review I want you to pay attention to. Do you need to pay payroll taxes at all if you are trying to pay yourself in a single member LLC? The thing is that if you own a profitable single member LLC, you are going to owe payroll taxes. However, the portion of your income subject to them varies depending on your business entity's tax treatment. If you remember, I was telling you earlier about how you classify your single member LLC. Are you going to classify yourself as a pass-through entity by actually filing as a sole proprietorship? Are you going to classify yourself as an S corporation, or are you going to classify yourself as a C corporation? Remember that payroll tax is a term that includes multiple subsidiary taxes, because a lot of folks talk about payroll tax, using the singular, but in reality, we're talking about a multiplicity of taxes. Generally, the most significant payroll taxes are the Federal Insurance Contributions Act FICA taxes. So this is 12.4% for Social Security and 2.9% for Medicare. So one thing I need to say here is that if you're a single member LLC, let's say your single member LLC is taxable as a sole proprietorship, you will need to pay FICA tax on your business's net earnings each year. So whether you pay yourself via owner's draws or keep the money in your company, your FICA tax liability will be the same. You know why? Because the IRS, you have already earned the money. You have earned the money. And however, it's more common to refer to these taxes as self-employment taxes. I'm talking about the FICA tax and so on and so forth. So in this situation, since you're not actually running payroll, okay, so that said, these are the same taxes that businesses running payroll incur on any wages paid throughout the year. So let me give you an example. Let's say you file an election to treat your single member LLC as a corporation. You will generally need to pay FICA taxes on your reasonable salary anyway. It doesn't change anything. The classification you have, whether you are an LLP, an LLC, a C corporation, an S corporation, everybody has to contribute to the FICA pool, okay, FICA tax pool, to say it very simply. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay yourself in a single member LLC. Let me give you a bonus piece of advice here. Consider consulting a tax expert. Everything I'm telling you here is may sound a little simple here, but the average independent contractor has a more complicated personal tax return than the typical employee. As a result, it's often worth engaging a certified public accountant, a CPA, as a small business owner, even if you are operating as a sole proprietor. A lot of folks believe, hey, I'm a single member LLC. My taxes are very simple, or at least they should be. So I'll do them myself. But if things become a little complicated, or if you have, let's say you have unusual transactions happening in your single member LLC, it's just better to actually hire a CPA. If you can't hire a CPA, you can also try. There are specialists called EA, so enrolled agents, or you can try a tax attorney. I mean, a tax lawyer can be pretty much be very well versed in the subtleties of the Internal Revenue Code. And if you have formed a single member LLC and want to optimize the way you pay yourself for tax purposes, your business is almost certainly complex enough to warrant hiring a CPA, EA, or tax lawyer. And the price of their services is a tax-deductible business expense, and they will save you enough in taxes to justify the cost. So this is kind of important. So consider getting expert tax advice today. One thing I also need to say here is that when we talk about getting a tax expert, it's not just about the classification you have for your single member LLC. It also depends on how much revenue you are pulling in every year. It also depends on the geography of your single member LLC, like where you operate and what kind of clients you have, like what kind of business you have in general. Because when it comes to taxes, you have to understand the U.S. tax code, the Internal Revenue Code is not really easy. You have folks who spend 20 years, 40 years actually learning the subtleties, learning the ins and outs of the U.S. tax code. So it's just better to hire someone. And one thing I also need to say here is that you have to track your taxes from year to year to make sure that they are going in the same direction your revenue is going as well. let me give you the approach here that we need to really consider if we want to think about getting paid as a multi-member LLC. Obviously, if things happen, you're by yourself, this is kind of cool. But at some point, maybe if your business is growing, you might invite or you might actually attract other investors who will want to join your journey and really kind of help you develop your business a lot more. So how do you actually pay yourself as a multi-member LLC? Because once you have one person entering your let's just say your LLC, it's no longer a single member LLC, right? If you are one of the owners of a multi-member LLC, you are treated as if you are a partner in a general partnership. The exception to this rule is if you elect to be treated as a corporation for tax purposes. So each member has a capital account. To get paid, LLC members take a draw from their capital accounts, and payment it's usually made by a business check. And they can also receive non-salary payments or guaranteed payments, basically a payment that is made regardless of whether the LLC has generated any net income in that month or quarter. So this ensures cash flow for each LLC member during unprofitable periods. Okay. Now, your LLC should have an operating agreement, whether or not you are a single or multi-member LLC. In it, you can stipulate how payments are distributed to each member. You can also set forth rules around the distribution payment schedule, if a vote is needed, and so on and so forth. And that's really important. And you should also reach an agreement with all members on how the company's profits will be divided, whether evenly or based on ownership percentage or otherwise. I mean, the law here is pretty flexible. You just decide whatever works for you. If you do not provide for those issues in your operating agreement, the default provision of the LLC statute under which your LLC was formed will govern these matters. So this is why it's always important to consult a tax professional, because there are other nuances to how LLC members get paid depending on the services they provide to the business. So bottom line is you want to make sure that you cover everything before you engage in a new LLC journey. Okay. Now, one thing I need to say here is that when we talk about multi-member LLC or even single member LLC, the LLC must report business income and deductible expenses on IRS Form 1065. So then each member will show their share of partnership income on Schedule K1, and each member must pay income taxes on their fair share of the profit. Members who actively work for the company must treat their share of the profit as self-employment income. So this is kind of important, but overall, this is a great strategy to have if you are trying to really take care of your payroll, and if you are a single member LLC. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. Until then, remember, stay marvelous.